Hi, this is Alexandre Alfonsi with Axonia Partners. I'm here with Abhinav Mital from the Parthenon Group, an advisory firm. And Abhinav, I believe you specialize in education and you're based out of Singapore. What makes the education sector so attractive those days?
Alexandre, that's a very good question. Education has 5 key characteristics which make it really special as an investment opportunity. The first is long-term revenue visibility, which means typically when you enroll a student in your institution, the student then stays with you for 2 years, 3 years, 4 years, even as long as 7 or 8 years in case you are a school. And that gives you a good view on how the cash flows will come in and helps you amortize your student acquisition cost over a longer period of time. Secondly, in a good education business, there are usually high barriers to entry. Now, these barriers may present themselves as capital required to set up a campus, may or may not be the case. But many often it does represent itself through accreditations required, which not everyone can secure, or it takes time for them to secure those accreditations. Or it could also be through reputation, because I'm sure when you would have chosen your undergraduate or postgraduate institution, you would have looked about how well recognized, reputed the institution is amongst employers, what your family, friends, etc. say about it, and which again cannot be built overnight. So there are some significant barriers to entry which prevent new entrants to get into the market very quickly. The third element of it is, which is again makes education quite attractive, is that demand is usually greater than supply, especially in emerging markets. Education, especially private education, is more and more an aspirational product. Public sector is running full, so there is always more people applying for seats for higher education or good school education than seats available. So for example, in South Africa, there are 3 times more applicants for higher education than number of seats. In Kenya, you have to wait for 2 to 3 years before you actually get a seat in a public university to do a course of your choice. So that's a very strong demand driver. Moreover, supply is inelastic because you can't add seats variably. It adds as a lump sum. So if your competitors have not added seats and they're running full, you can benefit next year because you have the seats, and they will not go back to the old competitor. They will stay on with you for 2-3 years. So that's another great advantage. Fourth, prices typically in a good education business rise faster than inflation, and that's because they're usually linked to white-collar salaries. So if you're doing a business degree, it's white-collar salary. That's the kind of job you will get at a bank or a financial institution, or in the corporate. It's increasing faster than inflation. Or if you are in schools, again, private schools, typically the people who can afford it, their income levels are growing faster than inflation. So therefore, it's kind of linked to white-collar salary inflation. And lastly, the economics of running the business are quite positive. Education businesses typically go up to 35 to 40% EBITDA margins, but more importantly, you collect this fees up front. Right. And so you can manage your working capital very well. So these characteristics make education very attractive. Now, depending upon which sector or asset, where your asset lies in, be it higher education, vocational, English language, these attributes may vary. So English language, the revenue visibility is lower because you're doing 3-month courses, 6-month courses, so it may not be very strong on that attribute, but then there would be other elements that would work for it.
And I mean, you and your team, you have advised many clients on the space. Which successful strategies have you seen from investors being taken?
So that's again a good question, because it is a tough sector to enter because assets are quite small and its market is very fragmented. It takes a lot of time for deals to close because it's what I like to call a mom and pop sector in general. So your schools or institutions are run by promoters who are not they're not financially savvy. They have been doing this for a long time. They are emotionally connected to the businesses. Now, in such a situation, for a private equity firm to go out and find individual assets and keep buying them is challenging. A strategy that has worked very well for PE firms is to invest in platforms of education, or invest behind teams that can create platforms. Right. So a great example of this is Laureate, which is the world's largest higher education company, close to about $5 billion in revenue. Investors like KKR have been behind it, and they have acquired 74 odd campuses or schools, colleges across the world. And that's a strategy that has worked very well. Last time, before Laureate went private again, they were trading at 14-15 times. So that's the kind of value creation. Same goes for Cognita or Nord Anglia, which are assets in the school space or the K through 12 space. And there is instant value creation, because they would buy a single asset at 7 to 10 times, but when they listed on the stock exchange or went public, they were trading at 15, 16 times. So that's a good strategy that they have adopted.
And last question for you, Abhinav. When you look at the drivers of value creation in the space, what do you typically see? What are the main drivers?
Right. So what these companies end up doing is, because the assets that they buy are usually, again using the word mom and pop, are essentially performing below their full potential.
Right.
And what these platforms are able to do is unlock that potential, and that's largely coming from top line growth, which is unlocking their pricing potential and unlocking or creating a more robust student acquisition system, and that essentially increases their top line revenue. Cost rationalization is actually not a strategy that these companies use. They in fact over-invest behind good management teams. They invest behind marketing, student acquisition, improving the general look and feel of the campuses, etc. So they'll invest behind all of that, but they will target for top line growth, and that's where the biggest value creation comes in. Unlocking pricing, unlocking student acquisition and volumes, that's where it comes. And then of course it comes with the benefits, because the financial world then sees that look, you have now suddenly got a scale asset, which is very rare, it's a scarce asset in the education space, so they're willing to pay that extra premium, plus you are getting access to this education sector in general, which has these five fundamental characteristics which we earlier spoke about, which are quite robust.
All right, very insightful. Abhinav, thank you very much for your time.
Thank you, Alexandre.